Hello, my name's Rachel and welcome back to my channel. So today I am doing an update on my self-invested personal pension, or my SIPP. So I opened up this account 18 months ago now. So I wanted to give you an update on how it was doing, share a bit of information on how the individual ETFs, funds, trusts and individual stocks and shares are all doing, and let you know a little bit about my plan for the future for my self-invested personal pension. So I have a separate video on what a self-invested personal pension is, but essentially it allows you to choose the investments that you want to make to get you ready for your retirement, so you can invest in a lot of different things. So I'm going to share exactly what I am invested in. I have my SIPP with Barclays simply because they were the company that I opened up my first stocks and shares ISA with, or investment ISA, so it just made everything simpler to have my SIPP with them. However, I am going to do a video soon which compares all of the different SIPP providers in terms of fees and what they are offering, because I'm currently looking into setting up my husband's self-invested personal pension and helping him do that. So if you want to see that video, then please do subscribe to this channel because it'll be coming up in the next couple of weeks. So I invested an initial sum of £9,126.72 across funds, shares, ETFs and investment trusts. And the current value of all of those investments is £12,835.29, which is an increase of £3,708.56, or a 40.63% increase in the last 18 months. And I am absolutely thrilled with that increase. So what I'm going to do first is tell you exactly how much the funds, shares, ETFs and investment trusts have gone up. And then I will break that all down into those specific funds, shares, ETFs and investment trusts that I've personally decided to invest in. You will notice there that I did not include bonds in the type of investments that I have in this self-invested personal pension. So normally if you were to work with, say, a financial advisor, they would potentially say that you should have around about your age in bonds. So for example, I'm in my 30s, so maybe I should have around 30% invested in bonds. But for me personally, this wasn't something that I wanted to do. At the moment, I'm focusing on just growing this pot of money. And then later on in life, I might start to look at slightly lower risk investments and potentially invest in bonds. But at the moment, for me personally, that wasn't something I want to do. But if you are looking to set up your own self-invested personal pension, please do your own research and look into the type of investments that you want to hold based on your risk appetite and how close you are to retirement. Let's get into the details. So for funds, I invested £6,060.93 into funds. So the biggest amount of my money went into actively managed funds, which you might be surprised about, but there are some funds that are brilliant and have historically beaten the market and have continued to do so for me. So I am really, really happy to be invested in them rather than going down the index tracker or ETF route for all of my investments. Anyway, the current value of those investments is £8,748.46, which is a difference of £2,687.53, or a 44.34% gain in the last 18 months. So some of these investments I might have bought more recently, or some of them I might have held since May last year. So for example, the ETFs and the investment trusts I bought more recently, so the gains for those are obviously less because they've had less time to grow. So shares, I just have 2 shares in this portfolio. I bought a value of £1,045.57 of shares. Now they are now worth £1,821.86, which is a difference of £776.29, which is a gain overall of 74.25% in 18 months. The shares have obviously done very well and they have beaten the funds and ETFs and investment trusts that I am invested in. However, going forward, I am not likely to be investing in individual stocks and shares in this self-invested personal pension. Moving on now to ETFs. I do hold some ETFs in this account. I just had a value of £503.50 as a book cost. They're now worth £553.02, so that is a gain of 9.84%. I only bought this investment a couple of months ago, so actually that is really, really good, and I'm really pleased with that. But it hasn't had that time to mature, so the full 18 months that some of the funds I'm invested in have had. Then finally, moving on to investment trusts, I bought a value of £1,516.72. Current value is £1,711.95, which is an increase of £195.23 or 12.87%. Again, this is one I bought quite recently, so that is in the last couple of months that it's gone up. So as I said, over the last 18 months, this portfolio has gone up 40.63%. which I am very, very pleased with. I do understand that the last year has been very volatile, while the last couple of years in the stock market has been very, very volatile, and I would not expect to see these kind of returns going forward. I would absolutely love it if that did continue in that way, but I am absolutely not expecting that to happen. When I'm forecasting and looking at the figure that I want to retire with at the age of 55, I'm absolutely not expecting to see 40% returns in the next 18 months. Just to say on that point, and looking at forecasting and thinking about retirement, I think it's absolutely awesome to have a SIPP and have all of your smaller pensions from previous jobs in one place, so you can really focus on the amount of money you have invested, choose those investments, take control of your finances, and work towards a figure that you would feel comfortable retiring with at 55. Whereas before, when I had them in different old workplace pensions, I didn't really have an understanding of what they were invested in, and also I didn't have that one single figure ready to work with. So I'm really pleased that I opened up a self-invested personal pension. Let's get into the details of exactly what I'm holding in all these different funds, shares, ETFs and investment trusts. Which ones are they? Again, I am not recommending this is how a SIPP or pension should be structured. This is simply what I did when I set it up. To be honest, this portfolio is very tech heavy and definitely could do with a little bit more diversity. So that is something I'm going to be working on in the coming months and years. But for now, just wanted to share exactly what I'm holding. So as I said, my self-invested personal pension is with Barclays. So they give you a really nice breakdown of how much each individual investment is up. The funds that I'm holding are Polar Capital Global Tech. That is up 48.2% since I invested in it. Then Bailey Gifford Positive Change, which you will see I have a lot of Bailey Gifford Positive Change in my investment ISA. I really, really like this fund, and it is up 35.2% in my self-invested personal pension. Then you'll see I then have another tech fund, which I absolutely wouldn't recommend having done this and having the two tech funds within the portfolio, but this is what I did. So I'm just being honest and sharing exactly what I've done. Anyway, the next one is AXA Framlington Global Tech, and it is up 61.2%. So as I said, I will not be adding any more kind of tech specific investments into this portfolio. Then I have the Bailey Gifford American Fund. This is the accumulation fund. I added this in recently, fairly recently, and it's up 13.9%. Then the next fund that I have is one that I haven't got in my investment ISA, so it's one that I chose at the time 18 months ago, but one that I don't hold externally to this pension, and it's the Janus Henderson Global Equity Fund. It is at 45.1%. I'm actually going to, after this video, have a little look at it in a bit more detail and see if it's something that I want to stay invested in, or if I might want to move that money around, because that is obviously something you can do when you're managing your own pension. Then moving on to shares. As I said, the shares in their entirety have gone up 74.25%, which is huge, and I'm very pleased with them, and I will be holding on to both of these individual shares. However, I'm not going to be buying anymore. The first one is actually Barclays. So as I said, this is a Barclays pension, self-invested pension, and I'm holding a Barclays share within it, which is up 91.6% since I invested in it, which is fantastic, and I do plan to hold on to it. Then Experian is the next one that I have, which is up 38.5%. Obviously I use the Barclays service, and I've also used Experian historically as well to check my credit score. So both companies that I use and both companies that I plan to hold on to in this SIPP. Then moving on to those ETFs. So this one might come as no surprise. It is the iShares Global Clean Energy ETF. This is up 9.83% since I bought it, and I bought it fairly recently. This is one of those investments that I do plan to hold on to well into the future. Then the final holding that I have in my self-invested personal pension is the Scottish Mortgage Investment Trust. Again, this is another one of my favourite investments that I am holding outside of this pension, and I hold it in my investment ISA. So this was one I recently added, which is up 12.8%. So in this video, I also wanted to talk to you about my plan for the future for this self-invested personal pension. I will be paying small amounts into this pension. However, I've made the decision at the moment to focus on investing and maxing out my investment ISA every year if I possibly can. So I've made a separate video on this which will detail why I am choosing to max out my investment ISA rather than maxing out my self-invested personal pension. But I will still be paying small amounts into this SIPP, and I think what I'm probably going to be doing is probably topping up the Scottish Mortgage Investment Trust. The fees are really, really good for the Scottish Mortgage Investment Trust. They're currently sitting at 0.34% a year, and its 3-year annualised returns are 46.86%. So the Scottish Mortgage Investment Trust is a global trust. It is quite volatile. It also is quite tech heavy. So it's not really one for the faint-hearted. So this is quite a risky investment and a risky investment trust. So on the synthetic risk and reward indicator, which goes from 1 being the least risky all the way up to 7 being the most risky, it's up at 5 at the moment. So potentially higher risks do tend to see higher rewards, but this is not always the case. So at the moment, I think I'm going to be adding in the Scottish Mortgage Investment Trust to this self-invested personal pension. However, as I said, I will be focusing on investing in my investment ISA rather than my self-invested personal pension at the moment. And if you want to check out that video and see exactly why, then please do. But thank you so very much for taking the time to watch this video. I hope you found it interesting. Please do go away and do your own research, because this is certainly not a how-to video. I am just sharing with you what I'm doing. Don't copy me. I'm not a financial advisor. I'm just very keen on investing and enjoy sharing what I'm doing here online. Anyway, thank you so very much for watching, and have a lovely day. Bye bye.